Hey there fellow investors, welcome back to another exciting video on the MagicGains channel. If you're new here, don't forget to hit the subscribe button and the notification bell so you won't miss out on any future investment insights. Today we have some hot news regarding Palantir, and we'll be diving into Palantir technology, also the questions on everyone's mind. Is Palantir a buy or sell after the board approved a $1 billion share buyback? So let's get started and let's find out what the result of this puzzle will be. So before we get started, if you haven't heard about Palantir, they are a major player in the big data analytic industry, known for their cutting edge technology and their impressive client list ranging from government agencies to Fortune 500 companies. Palantir Technology, again, is an American software company that was founded in 2003. Palantir's primary product is the Palantir Gotham platform, which is used for data integration, analysis, and visualization. The platform is designed to help government agencies, financial institutions, healthcare organizations, and other large enterprises to make sense of vast and complex data sets. The recent board approval for $1 billion share buyback is making investors raise their eyebrows. But what does it all mean? Is it a sign of strength and confidence in the company's future, or does it raise concern about the financial position of the company? So we'll be talking about Palantir's recent performance, financial health, market trends, and industry outlook to help us determine whether it's a time to add this tech giant to our portfolio or hit the brakes and head for the exits. But remember folks, this video is not financial advice. It is essential for you to do your own due diligence and consult with a qualified financial advisor before making any important investment decisions. So let's get started. Make sure you stick around until the end as we'll wrap up with our final verdict on Palantir and what it means for you as an investor. Don't forget to hit the like button if you find this content informative, and share your thoughts in the comment section below because we'd love to hear from you. We'd love to engage in meaningful conversations with you. Alright, fellow investors, fasten your seatbelts. It's time to explore the potential MagicGains with Palantir. So let's get started. So with its innovative data analytics solutions, Palantir has been making headlines lately, and we're here to break down the numbers and trends that matter. First off, let's talk about Palantir's recent performance on the stock market. We've seen quite a bit of volatility, but what is driving these fluctuations? Has the recent approval of the $1 billion share buyback had any impact on the stock price? Okay, let's see. So Palantir said in the last earnings report that the second quarter revenue was increased by 13% year over year to $533+ million. And they also reported a quarterly earning of 5 cents per share, which met the Wall Street estimation. So this is the third time Palantir has had a profitable quarter. So their commercial revenue grew 10% year over year in the US, 20% year over year, and the government revenue climbed up to 15%. So as you can see guys, things are getting better and better for Palantir, and as a result, they decided to buy back some shares and reinvest in the company. First of all, what exactly is a share buyback? Essentially, it's when a company purchases its own shares from the market. This can lead to a reduction in the number of shares, potentially boosting the value of each remaining share. The news of Palantir's $1 billion share buyback has caught the attention of many investors, but what does this move signal? Companies usually buy back shares for various reasons. One common reason is to signal to the market that the company's leadership believe its shares are undervalued. It also can be a way to return capital to shareholders or utilize excess cash. Now, the big question is, how might this buyback impact Palantir's share price? While it's not guaranteed to lead to an immediate spike, a reduced number of outstanding shares could potentially lead to an increase in value of each remaining shares. So it is important to strike a balance. While share buybacks can be beneficial, a company needs to ensure that its financial health remains intact. This includes accessing cash reserves, debt level, and ongoing business operations. Share buybacks are often viewed as a way for companies to allocate capital effectively. If Palantir believes in its long-term growth potential, then this buyback could be seen as a strategic move to enhance shareholder value. So what's next for Palantir? The approval of this share buyback might be just one part of the company's larger strategy. As investors, it is essential to consider how this move fits into Palantir's overall vision and its role in the dynamic tech industry. So Financial health is a critical factor to consider when evaluating any company. We'll start by talking about the company's revenue and expenses. Also, one key aspect to assess is profitability. Are Palantir's operation generating consistent profits, or are there any fluctuation? So in this chart from Yahoo Finance, it's showing us yearly and quarterly revenue and net income of Palantir since 2019 to 2022. For time's sake, let's just go over the most obvious numbers. Feel free to leave any questions in the comment section and I will be happy to answer them for you. So the first thing in this chart is the total revenue. As we can see, starting from 2019 to 2022, Palantir has been reporting an increase in revenue year over year according to the yearly chart, meaning that each year they have more money compared to the previous years, which is a good thing for the company itself. So going down to the net income, it's the overall profit that the company's made. In other words, the money that is left after all their expenses. We can see that they have been in deficit for the last few years. However, they show a lot of sign of progress every year as the deficit is being lowered over time, except of course the COVID-19 year where they have had more than $1 billion deficit. Now, let's talk about the last few quarterly reports. For the total revenue, the same things apply here. But when it comes to the net income, we see a change for the last 3 quarters. Since the end of 2022, Palantir has had 3 straight quarters in the positive. Those are quarters where Palantir has had a profit. So that is exactly what we want to see in a company. Progress. As Palantir is expanding and growing their client list, it's a matter of time they become a yearly profitable company. Then we will truly see how that will reflect in the stock price. So, based on what we've seen here, where do I think Palantir is heading? The stock giant is really expanding with contracts from governments around the world and many other institutions, as well as some of the biggest companies in the world. Palantir is supposed to be revolutionary in the tech and defense industries. What I personally will do is to continue to invest in Palantir for the long run. No matter what happens in the short term, I believe companies like this are here to stay and will be the future. So the numbers are speaking for themselves. I believe Palantir is a company worth looking into for the long term and as a long-term investment. So what do you think about Palantir after watching this video? Feel free to let me know in the comment section below. Thank you for joining us today on the MagicGains channel. If you found this video helpful, don't forget to give it a thumbs up and share it with your fellow investors. Subscribe to our channel and hit the notification bell so you'll be the first to know when we release our more exciting content. Remember, investing in the stock market carries risk, but it also holds incredible opportunities. Stay informed, stay educated, and most importantly, stay patient. Until the next time, may your investment be magical and your gains be plentiful. So this is Hind from MagicGains. Until next time.